I just wanted to thank each and every one of you for opening up your books, essentially, your secrets, sharing your tips and being so generous with your information. And what I've loved about COVID, one of the other big up moments from COVID has just been the sharing of the industry and the coming together, because we truly are in it together. Now, there's so much marketing, there's so much pent up demand, there's so many trends that have been going in the wrong direction that we kind of have a perfect storm to come back, but we've got to support each other and really move forward. So I just want to thank each and every one of you. Congratulations on your businesses, all the best in the bounce back, and thank you to everyone who's been watching. So you guys are free to go, and I'm just going to do a quick introduction. We have one more panel for the day, and the topic is around if I can find it. So it's about business and expansion. And I'm going to be introducing the fabulous Dave Olstead. Are you coming from Manchester? Is he coming from Manchester or London? I'm not sure. And he will be hosting the panel, Business Expansion and Innovation. And Dave is the head of member experience at UK Active. So there's a thing or three he knows about experience, and we're very, very excited to bring you this last panel. Some of the previous panelists picked up on some of those add-ons, some of those spin-offs, and we expect that discussion to go further in this conversation. So over to you, Dave, if you are there.
Thank you, Emma. And yes, all the way from sunny Manchester today. No, thanks again. Thank you so much. Some really amazing insights then, and some really great case studies and incredible conversations. And it goes without saying, Emma, look forward to seeing you on an Insta Live with the Zero Gravity Boys sometime soon.
Can't wait. Have a great panel. Looking forward to listening.
Thank you. And thanks everybody else for joining us on, as Emma said, what is the final session for Sweat 2021. If you've been with us all day, we hope you've enjoyed the session so far. If this is the first session that you've managed to dial into, well, welcome to Sweat 2021. This webinar is going to run for around 45 minutes, starting with an introduction to the panel, and then into an open discussion, very similar to the last session, around, as Emma said, business expansion and innovation. We're leaving some time towards the end for some question and answers. Before we kick off, I'd like to thank Technogym on behalf of UK Active for supporting as headline sponsors for this event. And as Emma already said, my name's Dave Olstead, Head of Member Experience at UK Active, but you're not here for me, so let me introduce you to today's panel. We have Todd Wadler, CEO and founder of Box Union. We've also got Zoe Batelli, co-founder of the Refinery E9 Studio and the Refine with Alfie app, and Ali Anazi, founder of Tamwheel Capital, a consumer-focused M&A and private equity advisory business. So very similar to the last session, I'll give each panelist around 5 minutes just to introduce themselves and get to know, so you can get to know them, and then we'll delve straight into the questions. So without further ado, over to you, Ali.
Thank you, Dave. Yeah, very kind of you to invite me on your panel. My name is Ali Anazi. I am the founder of Tamwheel Capital. My story, journey, career started in the mid-90s. And for 18 years, it was a very corporate, very vanilla, and quite frankly, quite a boring journey. I qualified as a chartered accountant in the late 90s, and I spent the next chapter of my career working within the M&A and private equity team of a firm called Baker Tilly, who subsequently became RSM. And I was doing one of two things over there, either providing sell-side advice to founders, owner managers, operators, who were looking to sort of realize value from their businesses, so trying to maximize value wherever possible, or we were advising the same category of client, raise capital, raise institutional money to fund expansion, or to help them de-risk, provide them with some cash out. And often it was to do a combination of those two things. So yeah, had a sort of, a very sort of regular corporate journey at Baker Tilly. I was there for 18 years, learned a lot, did a lot of deals, got a lot of transactions away. And all of that coincided with the boom of the private equity asset class. So I found myself increasingly getting pulled into private equity deals. That over time became a specialism. as did the leisure and hospitality sector. So I ended up becoming a partner there. I ultimately looked after the firm's relationships with the private equity community, and I also led their, founded and co-led their leisure and hospitality team. But after 18 years, started to fall out of love a little bit with the corporate world. Having spent so much time with entrepreneurs and founders and sort of feeding off their energy and their appetite for risk, it sort of dawned on me that I'd never taken any risk myself. And I started to get itchy feet. And so I thought it was time for me to do something adventurous, something entrepreneurial. So back in 2013, I resigned. I got off the corporate bus, so to speak, and started my own sort of entrepreneurial journey. I persuaded a colleague of mine at the time to do the same. We started Tamwheel. And Tamwheel is, like Dave said, a consumer-focused M&A and private equity business. We act exclusively for founders. So we're always in the camp of the entrepreneur, the operators, the owner managers. We're sector focused. So it's the consumer category is where we spend our time, but more specifically, we target high growth challenger brands. So these are businesses in their respective verticals doing something interesting, game-changing, disruptive. And those are the businesses that we make an effort to sort of represent. In that time, we've developed some experience and expertise specifically in the world of fitness. So if I talk to some of the deals that we've closed in that sector, we advised on the buyout of Gymbox from Fitness First, and all of Gymbox's fundraisings after that, whether it was equity, mezzanine, or debt. And actually, the first transaction that we did with a Tamwheel hat on was with Gymbox. Previous to that, the Gymbox relationship started at my predecessor firm. And that was a £60 million, circa £60 million EV deal. It was funded by HSBC and BGF. Subsequent to that, we did a deal, slight departure from the world of sort of subscription-based, membership, revenue-based fitness. We moved into sort of pay-as-you-go and the class-based sector. So we helped the founders of Frame, Joan and Pip, get their deal over the line with Piper. That was back in 2017. And then subsequent to that, we did another deal in the boutique category, but with a bit of a twist. This time it was a business that sort of straddled the world of fitness with the world of clinical. So it sort of provided a combination of Pilates, physiotherapy treatment, sports massage, a clinical PT, and that was also a private equity deal, and it was backed by Foresight. So hopefully that sort of journey and story will allow me to make a positive contribution to this debate and panel.
Absolutely, thank you very much for that, Ali. And given the current landscape and anybody looking to kind of grow the business in future, we're really looking forward to picking your brains over the next 45 minutes to see what opportunities there are out there for operators and budding entrepreneurs. Next, I'd like to introduce Zoe Batelli, the co-founder of Refinery E9 Studio and the Refine with Alfie app. Are you there, Zoe?
I am here. Hello. Coming out you loud and clear from London.
So over to you for your potted history of your career so far and what brings you to speak to us today.
Thanks, Dave. So my career started a little bit like Ali, really, in the corporate world a long time ago. I worked in sales mostly, bit of marketing as well, and was becoming a bit disenchanted with it, if you want. So I trained to be a yoga teacher about 8 years ago now, and kind of had always been my passion to be a yoga teacher and I've always been into health and fitness. So it's always been a kind of passion of mine to take that further and do something with it. So we were fortunate in that we found an amazing property about 7 years ago that we developed into what is now the Refinery in Hackney. And we have 3 studios there with 2 therapy rooms as well. So it's a real kind of holistic space where you come and not just work out, but you come and get treatments. It's a community vibe, you hang out, you know, we're really lucky actually with how it was building. We, a couple of years ago, were sort of looking to expand our brand, and actually through various conversations and where we were at with it, decided that actually to really grow our brand, we wanted to go into the digital space. So this is kind of what we've done with Refine with Alfie, is not necessarily a COVID response, and something we were working on, as I say, a couple of years ago. When we were building it, really wanted to come up with something that was really different to the format that was already out there in the on-demand market, which was, you know, traditionally mostly video at this time, and bring something a little bit disco. So we really, you know, our brand, it's sort of the values at the base of the brand are it's seriously about inclusion, accessibility, making things accessible, because, you know, sometimes fitness can be quite intimidating and a little bit tricky to enter into the space. If you're a new consumer and you've not done it before, it can be quite overwhelming to pick something up. And ultimately, this is about really what's inside that counts, and keeping people healthy and fit and, you know, mentally well, I think, and building a routine that is sustainable. So when we were kind of building it, it's like, well, okay, how do we do that in a different way to make something fun, engaging, and also future-proof? So Refine with Alfie is an augmented reality ready, avatar-led fitness instructor. That's a mouthful. Say that after a glass of wine. So what it brings us, we've built the app completely differently than, as I say, the traditional format. So we wanted to be able to bring a bespoke user-led class to the consumer really quickly, rather than just video format, which obviously it takes a long time to build video format. And then also it's kind of you're scrolling and scrolling and scrolling, trying to find the class that's good for you. So we built Alfie on a gaming engine, which really brings us a lot of flexibility and a lot of possibility for really exciting things actually in the future. So we have a gamification element to it, which we hope will really help people maintain their fitness, which is absolutely what we want to do, where you earn tokens. So every time you take a class, you earn tokens, which you can then redeem against accessories for the Alfie. You can change the outfit, you can gift it to a friend, or you can ultimately save up your tokens and give it to charity. So there's kind of lots of elements that we're working with that we really want to develop. And I mean, this is brand new, so we've literally just launched, and obviously launched at a time when everybody is going into this space. So timing wise, it's tricky for us, but actually Alfie is kind of peerless at the moment. So we hope that from that, with the augmented reality piece as well, so it is completely ready for when the hardware arrives, which we hope will be at the end of this year, towards the beginning of next year, where you put your glasses on, your AR glasses, which will be as light as a pair of sunglasses now, and Alfie will be there right next to you in your space. So you can see this as a teaser app. We've got a teaser app, how that will already look, and then we have the fully functioning yoga and HIIT app that is available now on the app stores.
Cool, thanks Zoe. And I'm not the slightest bit embarrassed to say I've been doing a little bit of disco, as you said, with Alfie myself this week in the front. And it's not the first time throughout Sweat today that AR as a technology that's coming has been mentioned. So yeah, really looking forward to kind of picking your brains a little bit more on what that might look like in future as we go through the session. And last but obviously certainly not least, we've got Todd Wadler, CEO and founder of Box Union. Your 5 minutes are up, Todd.
All right. Well, thanks, Dave. And thanks, everyone, for joining. So I'm actually coming from Lake Tahoe, California. So it's early morning here. So I'll try to I'll try to be I'll try to have my words here. I already don't. So my background, real quick. I was a founder of an investment bank. My last job before Box Union, called Moelis & Company, which is definitely, we have a nice sized business in the UK actually. And so I spent 25 years advising companies, all different sizes, lots of entrepreneurs, people within the health wellness space, but also in other categories. 2017, we launched Box Union, which is a fitness boxing studio-based business, 3 studios out here in Los Angeles. And then, I'm sure it'll come up later. And then we launched a digital business at the beginning of COVID, as a response, which, I think we were really pleased with how it's performed. It's attracted a global audience. And, that's kind of what we were doing. At the end of last year, we purchased and acquired Title Boxing Club, which some of you may have heard of, but Title Boxing Club is the largest franchisor of fitness boxing studios or clubs in the world. Now we have a combined 166 clubs under our brands. And, clearly the leader in the physical space, but also as part of it acquired their digital business as well. And so if we're not number 1, we're number 2 in the fitness boxing digital space as well. And we are, really excited coming out of COVID, obviously working incredibly closely with our franchise partners, where probably 80+% of them are open today. And, our corporate clubs in Los Angeles, we're still shut down, but, doing things like outdoor classes, et cetera. So, we're really excited. And what our real big goal is to build really a first omni-channel business, digital, physical, and really own our category and, and really expand it coming out of COVID, both domestically, but also international will be a big focus for us, along with, continuing to grow, which is growing at a nice pace, our digital business. So thanks, Dave.
Amazing. Thanks, Todd. Okay, so that's a short introduction to the panelists today. What I'm going to do now is just go through a couple of questions that, following our earlier conversation in the week, has really got the cogs whirring in my brain to see how we can really get the most out of the next 40 minutes or so. But just to remind everybody on the call, if you have got any questions as we go through, please just pop them in the Q&A. Not that we're after a year of being locked down and on Zoom that we need a reminder as to how to ask questions on this platform, but just in case, ask them as we go and we'll be sure to get to them towards the end. I'm going to come straight back to you, Todd, actually, to kick us off. You've already mentioned kind of the huge announcement at the beginning of the year and stepping into kind of the franchisor world. I'd be really interested to hear a little bit more insight from you around the drivers behind that as a direction for you as a business, especially given everything that the global fitness economy as well as the wider economy is facing. Has it always been a part of the plan to go down the franchise model, or is it as a result of the crisis that we've recently faced?
Sure, great question. So, look, I think fundamentally in the fitness business, right, to me at least, it's about product first. It's about creating a compelling product that you think, that consumers like, enjoy, and want to participate in. Well, when we launched Box Union, we were wildly surprised of how many people, our first studio was right across the street from a number of hotels in Santa Monica, California. We were surprised how many people approached us about franchising, or when you're the size we are, it was like licensing it. A global audience was like, hey, can we do what you're doing? What we really developed at Box Union was what we call box to the beat of the music, but really what it was pairing our workout to the rhythm of the music in order to pace a boxing workout. I'll just leave it at that for now, but there was a lot of reasons why we did that. So I think we very early on got, a little bit of like, okay, this could be a way to go. The issue, obviously, that a lot of people have in franchising, generally speaking, is how do you control your product? How do you develop it? How do you make sure the quality stays with what it is? So we were going down the path, probably many people on this call, in this conference have gone, we're just going to build them. So we just started building them, and we had incredibly strong performance, very loyal member base, et cetera. I think what COVID exposed in part was the concentration of risk that one would have on a complete owned and operated model. And again, not to go too deep into it, but whether that be with landlords and how landlords respond when they see a deep pocket behind. But the other thing is, you know, you start to go into whether it be different countries or different states here in the United States, there's a different product in different places that need to be refined for what works for the local audience. And an owned and operated model, if you actually study a lot of them, you know, I won't mention names, but you know, there's usually a few that do really well, and there's a bunch that don't do as well. And it's very hard at times for, I think, an owned and operated big corporate company to understand and have that focus of detail that actually a small business owner or someone else might have, that's really in that market, understanding the consumer, understanding the traffic patterns, understanding what, you know, what little tweaks might or might not need to be made versus just a copy paste from, you know, from a corporate mentality. So I think when COVID hit, you know, we you know, we're looking at how to expand our business, you know, probably like any other leader that's here. I turned to the company on a Zoom like this and I said, we're going to come out stronger than we went in. I had no idea what I was saying, but I just figured I would say it. It's the right thing to say. It's what you want to hear. And, you know, we actually got called to buy our company, buy Title Boxing Club, and we turned it around. And what it really showed me really quickly was that coming out, we wanted to grow, we wanted to scale, but we also didn't want to have the inherent risk of all that leverage in the system. And it really opened us to it. And I've used this analogy, so it might mean something to some people. It's like, you know, a private equity firm is not necessarily all the principal of the private equity firm's capital. They've diversified the risk by having different capital sources. Again, I come from the finance world originally. That's what the franchise business is. And we're super excited to grow that. As I said, you know, part of the reason I'm on here is we're looking for people to help us grow internationally. We have a really strong brand. Title Boxing distributes products in over 200 countries. And so it really was, I have to say, it was a reaction at some level, but COVID created the opportunity, but it wasn't such a new concept to us. And we determined it was really the best way to grow.
Great. Oh, thank you for that. And Ali, we're going to explore some other opportunities to grow a little bit later in the session. So it'd be interesting to get kind of your view on that as well. But before we do, if I can come to you, Zoe, the Zero Gravity guys earlier on mentioned that their app was a result of lockdown, which I'm sure many has. You've already said today that yours was already in the roadmap. Yeah. And Emma at the top of the session mentioned that AR is coming to the industry. You've already given us a bit of a heads up of the Alfit app, but for those who haven't, can you give us a little bit more of a detailed overview of what it is, and more importantly, and specifically, how for you the Alfit app dovetails into your in-studio offering? Because that was a really interesting conversation we had earlier on in the week.
Yeah. So I think for us, when we were thinking about expanding the brand, it's very much always about health and fitness for everyone is at the heart of it. So to bring the app was always meant to be an extension rather than a replacement. So it's at the time, of course, on-demand fitness was for people who maybe traveled or couldn't get to the studio, and that I think it was mentioned before that it's fundamentally changed. I think the whole way that the consumer consumes fitness now, and they will want an on-demand offering as well as the in-studio. So this is meant to be a very kind of complementary for our members, a complementary offering for them, but for us a real way to get to more people than we would be able to through bricks and mortar. Because of the way that we've built it, we've got personalization at the heart of it. We've got bespoke user-led classes. We've got gamification. We have 360-degree views that you can really get to see what the avatar is doing and the form of the poses. We have a posture clinic for kind of going deeper, diving into how the form should be. And I think for us, it's doing something that is first of its kind, you know, and that is a risk. It's always a risk. But it's, for us, it's really exciting because it's doing something that is a little bit more agile and hopefully innovative, that maybe does kind of like get people, because I think the danger with everything that's happening is that there's fatigue from too much sameness. And for us, that's where, you know, again, coming from it from a customer perspective is, well, we want them to continue with their journey, because ultimately it's about the health of the consumer. So if the fatigue, and we noticed it this time, certainly from the refineries perspective of our online classes, the appetite for it was, our live streaming was quite different in this last lockdown. I think where people had kind of, it wasn't a novelty anymore, and it was just people have kind of had this low level, I think, kind of, oh, just get us back to some kind of reality. So I think there's all sorts of things going on in the consumer's mind, but for us, it's definitely never meant to be a replacement. It's more of an enhancement. And yeah, like I said before, going to the gym, sometimes if you're a beginner or you're new to something, it can be quite intimidating to go to a class and to work out next to people who've maybe been going and they know the instructor and there's a little clique, and it's, you know, that's difficult. So Alfie is meant to be a way of practicing, of trying something different, or honing your practice because you can't get to the studio. So it's kind of that whole integration for us is really what it was about.
Okay, great, thank you. One for yourself now, Ali, if that's okay. Regarding the investment landscape, I've always touched on the franchise model briefly by Todd, but as you know, I recently listened to you speak on the Hospitality Maverick podcast, where you had some really interesting insights into where future investment may come from for operators in the industry. Specifically talking around landlords, which again has already been raised today on the session. It'd be great if you could share some of that insight with the group today, and since that podcast, if anything's changed from your perspective.
Sure. So obviously, COVID has thrown us all on one hell of a curveball. It's not just operators, it's not just investors. Landlords also have a seat at the table. And the landlord-tenant relationship, whether it's for hospitality or fitness, is a really important relationship for either of those sectors to thrive. And the reality is that the balance of power in that relationship, certainly in the UK, for many, many years, decades even, has been in favor of the landlords. I think that balance of power is likely to shift and change going forward. And I think because of COVID and because some businesses just are not, with the best will of the world, are not going to be able to adapt and survive, landlords are going to be faced with empty units, empty properties that they will need tenants to fill. And, you know, this is a very sort of generic remark and sweeping remark, but often landlords are, especially the institutional landlords, are well capitalized. So there is a school of thought out there that is emerging, and I think we're beginning to see this in practice, that you may well see landlords start acting and behaving as investors, taking on a sort of a dual role as landlord, receiving rent, but also taking on some risk and some ownership alongside their tenants and supporting them in their journeys. And whilst it might sound like a strange idea, actually, when you think it through, it's not, because whether you're a private equity investor or a landlord, the asset classes are not that dissimilar. They're both illiquid. You know, they can't translate to cash immediately overnight, unlike quoted company investing. They're both long-term in nature. There's a difference in the sort of the returns that landlords are seeking and the returns that private equity investors are seeking, but you know, the difference is not that large. And so the only thing that's stopping landlords from getting in on the investing game, sort of the principal investing game, is talent. And I think that is something that they can buy in, and they can start developing their own in-house teams. And so, you know, there is precedent for this even before COVID. So in our sector, in the fitness sector, Equinox, amazing brand, amazing format. Well, it's owned by a massive real estate group, or certainly massive in the States, Related Properties. And here in the UK, we're beginning to see the beginnings of, I think, landlords beginning to take some positions within multi-site bricks and mortar consumer-facing businesses. I think today it's largely been focused in the hospitality space. There's no reason why that won't start filtering through into bricks and mortar fitness. So it's a school of thought. It's something that I sort of subscribe to and I'm keeping an eye on. And I think we're beginning to see the early signs of that.
It's a really interesting school of thought. Thanks, Ali. Obviously, Todd, you've got experience in both camps, for want of a better word, and Zoe is an operator and Todd is an operator as well. Now, it'd be interesting to get your opinion on that and what that, if that's kind of an option or something that you would think from your perspective would look to come in the future.
So I haven't, honestly, I hadn't heard that exactly like that before. I think it's a good analogy with Related and what they've done. What I will say is there's a lot, I think it makes sense. We've obviously had, and I don't know what it's like there, but we've had a lot of renegotiations of leases, across, our own clubs, but also our franchise system. And, at some level, whether they're getting the equity or not, they're becoming partners more or less in your business. And I think the point about how they've had the leverage all the way through, I think is true here as well. And I do agree with you that that I think that balance of power is starting to shift. So like in our deals, just to be, sort of tangible about it, our deals, we might have been, we were paying a big flat rent. And now we're like, what we'll do for you is we'll pay you the triple nets, which is like for us, like real estate taxes and other things that they're doing to take care of the base building. And we'll pay you a percentage of our rent. Based on how our rent varies, we'll pay you. And this is with landlords that are, the JP Morgans, the Westfields. I mean, these are global owners of real estate, and they've been very flexible. And so I actually think it would make a lot of sense. The issue will be what Ali said, which will be talent and ability to pick the winners from the losers. And that's not going to be easy. That is another reason we did what we did through COVID, which was get bigger. I think being bigger and having that leverage ultimately to attract more capital will be important. And that's why we're investing to diversify our business, not only by geography, but physical versus digital. I think that there is this omni-channel world coming. And I don't think, I heard a little bit of the tail end of the last panel. Look, I think everyone's got to be careful to overinvest in digital as well. Like, clearly Zoe has like something really compelling in hers that's unique, right? But we've done through our brands, a lot of work with consumers, focus groups, people we've hired who've come from even way bigger brands than us. There's a use case for digital that might make sense for some brands, and there's a use case that doesn't. I think that you got to be really careful in that decision of personally of how you invest, because the dollars, we're getting people calling us every day wanting us to buy their business in and around our space. And, because I think there is, people want to get to digital, but there's a meaningful investment to be made to do digital correctly. So I'm sorry, I know I hit on a few topics there. I don't know if I was against the rules.
No. Really.
But I love the idea of what Ali's saying around the landlords. I think there is something for those players. I think it's smart.
It's certainly really an interesting one to watch over the coming years, months, definitely. So would you have any, from an operator perspective, potential looking to grow the bricks and mortar side of the business? Is that something that you would look for?
Oh, definitely. It's still within our plan to grow the bricks and mortar. It's not, Alfie isn't, that's it, we're done. But I think that's a brilliant idea. I hadn't, again, like Todd, I hadn't sort of thought of it like that. But I think, obviously it's kind of, it has to work both ways. You'd have to have an amazing relationship with the landlord. They'd have to understand you and the brand. And like you say, trust in you and your ability to find the talent that fits with your brand, because ultimately it's, you know, it's your brand on the door, you know, it's probably the risk. But I think it's a really interesting concept actually, and one to investigate for sure.
Definitely. Sticking with you, Zoe, on the next question, and there's a couple of questions come through already around this theme, but when we all caught up earlier in the week, we the word omni-channel came up when we was out discussing around what the future of fitness might look like and the future of the fitness industry, or as Emma referred to it earlier, phygital.
I love it, yeah.
Nice little word, I think. She's tried to coin that one. But essentially, the integration of physical channels and digital channels, but with an ultimate aim to create a seamless customer experience.
Mm-hmm.
From your perspective, Zoe, how, with essentially that offering already to a certain extent, how important do you think kind of the omni-channel offering will be as we move into a world post-lockdown when facilities are able to open again?
I mean, I do think it's probably going to be, really part of it, because of, as I say, people have become very used to digesting it as they have, and I need to, Todd, you mentioned when we caught up in the week, I think the squeeze aspect of, you know, I can just fit it in, and you know, I don't have the time. So I think there's an element of the industry needs to be quite conscious though of the fact that people are maybe, because they're squeezing things in, and that they're sort of maybe devaluing the routine and how important it is to kind of, you know, oh, it's just 10 minutes, I've done 10 minutes. Of course, that's better than nothing. But I think there is an element of us as we come back from COVID, which has been, you know, really, really difficult for everybody. And also because of the way that everything has changed within the industry, and you know, instructors going online and doing it for themselves, and studios going online. I think it's kind of almost like regrouping and coming back to, yes, an omni-channel is absolutely important from the brand's perspective, but I think equally from a kind of, just the safety perspective, the value of the training that our instructors have done, you know, we need to kind of really bring that back to a big focus, I think, going forward. So yes, omnichannel is here to stay without a doubt, but I think it's kind of how we communicate that is really important, and that's down to us as brands and us as operators to really bring that back.
Yeah, great. Ali, sticking with the theme of omnichannel and the kind of in this particular example, kind of have a digital offering as well as a physical offering. From an investor's perspective, if you're looking at revenue streams, again, I heard you speak around the importance of having diverse revenue streams or diverse verticals, I think you referred to it as, when it comes to investors looking at investing in a business that's looking to grow. How important do you think that is for someone in the health and fitness space to have a similar model where they're able to have sustainable revenue through different channels if they're looking to grow their business or the brand?
It's without doubt more important now than it was pre-COVID. So when, you know, before COVID, when we were deal doing and investors were sort of running the slide rule over some of the businesses that we were advising, they'd often apply sensitivities, you know, to the forecast. So what would happen in the event of sales dropping 10%, 20%? What would happen if CapEx costs rise, if rents rise? But nobody in their wildest dreams ever thought of applying a zero revenue sensitivity or the world shutting down as it did. So this has made the importance of not having all of your eggs in one basket become critical. And I think that is what is driving the trend and focusing operator efforts to sort of look more widely in terms of sort of revenue generation over and above traditional bricks and mortar. So I think it is going to become a must-have for investors. And I think the holy grail for a brand that wants to build scale and wants to go global is to try and get the right balance between the two. Have a hybrid model that delivers a best-in-class experience-led digital offer, digital solution that, you know, a workout at home, without compromising on look, feel of brand, without compromising on connectivity, maintaining sort of the community spirit, but also being able to apply a bricks and mortar solution. Because the other thing that COVID has taught us all is how much we are, hardwired to be amongst each other and to, yearn each other's company. And so I think there will always be a need and a love for working out in a venue, but certainly going forward, I think the right approach would be to create some balance between those two formats.
That's really, it's obviously, it's been definitely a topic of conversation over the last 12 months around the impact on the traditional gym model and whether operators need to do so. I'm sure operators on the call will be comforted to hear that, but also singing to their tune there. So thanks Ali. I'm really conscious of time. We've got a number of questions come through, so I want to just delve into them really for the last 10 minutes or so. Got one come through from Mike, I think aimed at you initially, Todd, based on the franchise model, but really interested to get everybody's opinion on this one. A business may move virtual across a brand, but how would you see franchisees essentially, or franchise model, dealing with a virtual offering? Because naturally the tie to the head office and also the franchisor. From your perspective, how would you see that working across that model, Todd?
Yeah, so what we're working on is a couple of things. So one is, right, a lot of that comes down to, think of it as this way. There's two different digital offerings in my mind. There's what would be more of a national, international, highly produced, and will evolve to be more immersive over time, et cetera, experience, okay? That's going to be a franchisor led. There's a lot of investment required to create the right product. That's going to just come down to economic splits, right? And my general view is fitness has always been a word of mouth business. And we will share a lot of that money, making sure, we get paid back for some of our investment in it, but we will share a lot of that money with the franchisees, to have them sell it through their POS and create it. And then the person who buys it will be telling more people. And that's how word of mouth happens. And it's a huge piece of the fitness business, period. And our franchisees are excited about that, and giving something that's reflective of the class experience to their customers. On the other hand, there's kind of what I would call the two-way communication, the Zoom-like experience. In that case, what we're doing is we're providing tools to the franchisees so that they can sell that, giving them training of how to actually, kind of make that experience work for the brand. Very valuable for them because, every one-off studio or two studio, can't come up with how to best do this, train their staff to do it, how to sell it, how to market it, and how to actually make it a revenue stream. So it's really a partnership. It's not meant to, it's not meant in any way to compete with them. It's really meant to support, enable them, give them a new revenue stream that they need. Fitness, I've always said to people, fitness is a category that doesn't have price inflation the way, you walk in there to a pub and they charge you X for, a pint, and the next year they might increase it by 3% and you don't know. You change the price of your fitness class, people know. So fitness operators are always looking for new revenue streams. So that's how we're going to partner with our franchisees to bring innovation to them, to allow them to sell it, allow them to make their money. We'll get our royalty. More people talking about the brand spreads the word, brings more people in through word of mouth, attractive customer acquisition costs to generate more revenue. That was a mouthful, but hopefully I answered the question.
Anyone else got any comments on that particular question?
I mean, for us, it's kind of, what Alfie brings, because it's ready to go. You could just literally give it to the franchisees, but it's a kind of, for us, it's the collaboration thing is definitely something to think about. So, we'll be talking to, once they can come back, it's hotel chains that Alfie is on the screen. And because Alfie is, can be stripy, it can be sparkly, it's glitter, it's essentially, it's unisex, it's very inclusive. So it can kind of, it doesn't, offend anybody, and it's going to be in hotel rooms. The diverse thing is kind of covered, and that is something that's really I think going to be prevalent. But that for us is definitely collaboration. It will be something to look at.
Dave, I think for me, it needs to be franchisor led. So if I'm a franchisor and franchisee's got my brand above the door or my brand on their website, I wouldn't want them messing around, developing their own online fitness offering. Zoe's point about collaboration is critical, but I think it needs to be franchisor led. And frankly, franchisees are probably seeking that sort of support and guidance in any case. That's why they're franchisees. So that would be my take on it.
Great, thank you. I'm going to come straight back to you, Ali, with a question that's around your company, Tanwheel. If a company is looking to sell a minority equity stake of their business, how would they go about that by you guys?
Carefully. It's a big decision. If you're talking about selling a stake in a business that you've sweat blood and shed tears building, so it's not a decision to be taken lightly. So you need to understand what's driving that behavior. Is it about de-risking, putting some money away for a rainy day? Is it about trying to cash out as much as possible and sitting on the beach? So I think the starting point is understand the motives, what's driving that sort of behavior. And then, assuming that behavior is legitimate and is not the sort of behavior that's going to spook an investor. So assuming the solution to this sort of a deal is an investor-led solution, investors will be nervous about founders or entrepreneurs wanting to cash out, especially if there's real dependency on them in delivering growth. So that topic needs to be addressed. But assuming it can be, the rest is all about making sure whether the business, the brand is attractive, will it solicit interest, does it tick all of the sort of the regular boxes, good numbers, a solid team, a demonstrable path to growth. All of that is very vanilla. But I think the starting point is understand what's the motive behind wanting to go down that route. And if the motive is right, then the rest can follow.
Brilliant, thank you. Really conscious of time because we're already slightly over. Just wanted a couple more questions. We've had a couple of questions come through around a similar theme, really, but if I fire it quick fire to each of the panelists, it's more around sustainability, carbon footprint, kind of the impact that the fitness facilities have in terms of carbon emissions, etc. For the operators on the call, how important is that for you when you're looking to develop and grow your business? And then Ali, from an investor's perspective, how much does that play into whether an investor is looking to kind of focus on that as a key point for operators, especially when they're looking to grow, with all the focus on that from a global climate perspective?
You want me to kick off?
Anyone? Who wants to go?
So I think the topic is becoming increasingly important. I mean, you can't switch on the news, you can't open the papers without coming across headlines with respect to climate change, ethical investing, the need to be environmentally responsible. It's no longer sort of a peripheral topic. It is core to a lot of the sort of the business and commercial conversations that are taking place at the moment. And actually, it's an interesting topic for us as well, because we've started getting involved in the world of eco and eco brands and getting our heads around things like B Corp. And so we are also immersing ourselves in that world and are in the midst of, we're neck deep in a B Corp application at the moment. And so I think it's going to become a must-have topic for businesses that want to behave, responsibly. And I think businesses there will be a need for businesses to be seen to behave responsibly. I think it's a topic that's here to stay and will be part of the investment conversation in perpetuity.
Thanks, Ali. And Todd, Zoe, any thoughts?
I mean, I'll it's an interesting topic. It hasn't, it's not, I will say it's not really part of the discussion here in the US. As far as from a fitness facility, I mean, maybe, big box gyms and what they're doing, maybe there's some more discussion there. I actually wrote it down, and I'm gonna look into it more and see what we can be doing. But it's not, obviously today it's about survival, quite frankly, as the business and our business owners. In these smaller footprint, clubs.
Thanks, Todd.
I would concur with Todd there. It's not necessarily top of our agenda. I understand that it's something that we need to kind of consider, but at the moment I think it's survival.
Exactly. Brilliant.
That's a fair point. It's a fair point.
Okay, so one quick fire question to finish, really. And as Emma said earlier on the previous session, there's a number of questions we've not been able to answer as yet. So we'll be sure to, together with the panelists, make sure every question's been answered once we finish the session. But for each of you, what I'd like to have is one key hint or tip that you can give any of the attendees if they're looking to expand or bring innovation into the current offering as we stand here right now today. So you can give them one golden nugget as a result of today's session. What would it be?
For me, it's the brand. It's really get back to basics with your brand. This is an opportunity because things have been closed and dormant, and it's kind of now a chance to really revive your brand in the right way. And it's kind of exciting to think about it as almost starting again. So to go back and just sort of refresh why you did it, what your intention was, and kind of to really reinvigorate yourself, by the values of your brand.
For me, which is, I've lived by it over this last year, is scale and diversification. I think we don't know what happens from here, and we need to, I think bigger brands ultimately will have more leverage, whether it be with landlords, with all this stuff down the road, to be partners with them in expansion. But we also don't know, if we're at some point we're going to get, open and then get shut down again. And so having multiple revenue streams, I think, is absolutely critical. Diversification from geography, from, digital, physical, etc.
Okay. So we don't get shut down again. Hey,
Exactly.
Ali?
I'm going to give you two.
Okay.
So one of them is something that we look for when taking on a client, and it's something that the guys at Gymbox, the guys at Frame, the guys at 10, they all have in common, which is and it's really relevant to people that have an interest in seeking investment. So it's not about innovation, so to speak. It's being a good storyteller. And what I mean by that is, you could have the best brand, the best business, knocking out great numbers, but if you can't tell your story persuasively, passionately, with enthusiasm, then you're not going to get a seat at the table. And all of those people were amazing storytellers. And so it's a skill set that I think people should sort of brush up on if they can. And then the other thing that is also relevant to that category of people, none of them came from the fitness industry when they started their journeys. They were either, some strange reason, they're all marketeers or come from the world of comms and PRs. Zoe, you're from that world as well. There's some strange sort of draw magnet there, but what that meant was that they weren't blinkered in their approach to growth. And it meant that they could think out of the box and maybe go against the grain. And this is applicable to Todd as well. My dream is to be like Todd and leave the world of finance and start my own gym business.
Brilliant, thank you. Unfortunately, we're way over time already, so we're going to have to call it close there. But I'm sure everyone agrees we could carry on the conversation for quite a while yet, but unfortunately we're not able to. So it's just left to say a huge thank you to all the panelists for joining us on this afternoon's discussion. Really appreciate you spending the afternoon with us and sharing your insights. And Todd, for you, we really appreciate you getting up early to spend some time with us during the session. And I'm sure I speak for everybody on the call to say it's very much appreciated by the attendees also.
Thank you.
Thank you very much.
Thanks for having me. Yeah.
So that draws a close to Sweat 2021, a very different event than previous years. However, the level of insight, experience and expertise has absolutely hit the mark yet again. In addition, the ability to be able to connect with colleagues from all over the world has been a huge positive of doing this digitally. Whether you manage to stay with us for the duration of the session or dip in and out during your other diary commitments, we hope you really enjoyed the event. As previously mentioned, all the sessions have been recorded and will be available to watch or re-watch on the UK Active YouTube channel over the coming days. In addition, all registrants will receive a full digital resource pack as a thank you for attending. Whether you're looking to enter the industry with your first club, expand your business or bolster your current service offering, there'll be some useful hints, tips and information within the document, and it will be shared with you all tomorrow. On that note, I want to thank Partners And, who are UK Active strategic partners, for supporting the production of this resource pack, along with the wider network of strategic partners for contributing to the content. Once again, thank you to Emma Barry and the team at Good Soul Hunting, not only for the support in the production of the digital toolkit, but Emma for expertly hosting the Sweat again this year, especially as the start time for her was an ungodly hour all the way from LA. One positive note for her is that there's not a 12,000-mile commute home as a result. In addition, huge thank you to our headline sponsors Technogen for the continued support of Sweat. It's a real example of collaboration across the sector with the sole purpose of progressing our industry. To continue the conversation that we've had through any of the sessions today, please use the hashtag Sweat2021 across any of your social channels or head across to the UK Active Together members LinkedIn group. Finally, we hope you enjoyed the webinar. We'd love nothing more to close with a remark about meeting you in the bar to discuss the key takeaways from today's session, but unfortunately we're going to have to wait to another and future event to be able to do that. Thanks again for your attendance and continued support of UK Active. Have a wonderful evening.
It was done through. You were too. Why?